A credit score is a three-digit number that rates your creditworthiness. FICO scores range from 300 to 850. The higher the score, the more likely you are to get approved for loans and better rates. A credit score is based on your credit history, which includes information like the number of accounts, total levels of debt, repayment history, and other factors. Lenders use credit scores to evaluate your creditworthiness. There are three major credit bureaus in the U.S.: Equifax, Experian, and TransUnion. This trio dominates the market for collecting, analyzing, and dispersing information about consumers in the credit markets. The Fair Isaac Corp., now known as FICO, created the credit score model and is used by financial institutions. While other credit scoring systems exist, the FICO score is by far the most commonly used. Several factors go into calculating your FICO credit score, including your repayment history, debt utilization, the length of your credit history, your credit mix, and any new account openings. Lenders use your credit score to determine whether to approve you for products like mortgages, personal loans, and credit cards, and what interest rates you will pay. A credit score can significantly affect your financial life. It plays a key role in a lender's decision to offer you credit. Lenders are more likely to approve you for loans when you have a higher credit score, and are more likely to decline your loan applications when you have lower scores. You can also get better interest rates when you have a higher credit score, saving you money in the long term. Conversely, a credit score of 700 or higher is generally viewed positively by lenders, and may result in a lower interest rate. Scores greater than 800 are considered excellent. Every creditor defines its own ranges for credit scores and its own criteria for lending. The general ranges for how credit scores are categorized as excellent for 800 to 850, very good for 740 to 799, good for 670 to 739, fair for 580 to 669, and poor for 300 to 579. The U.S.'s three major credit reporting agencies, Equifax, Experian, and TransUnion, report, update, and store consumers' credit histories. While there can be differences in the information collected by the three credit bureaus, the five main factors evaluated when calculating a credit score are payment history, 35%, amounts owed, 30%, length of credit history, 15%, types of credit, 10%, and new credit, 10%. Your payment history includes whether you've paid your bills on time. It considers how many late payments you've had and how late they were. Amounts owed is the percentage of credit you've used compared to the credit available to you, known as credit utilization. For length of credit history, longer credit histories are considered less risky, as there is more data to determine payment history. For credit mix, a variety of credit types shows lenders you can manage various types of credit. It can include installment credit, such as car loans or mortgage loans, and revolving credit, such as credit cards. For new credit, lenders view it as a potential sign you may be desperate for credit. Too many recent applications for credit can negatively affect your credit score. VantageScore is a consumer credit rating product developed by the Equifax, Experian, and TransUnion credit bureaus as an alternative to the FICO score. FICO creates a single bureau-specific score for each of the three credit bureaus, using only information from that bureau. As a result, the FICO is actually three scores, not one, and they can vary slightly as each bureau will have different calculation methods. A VantageScore is a single, tri-bureau score, combining information from all three credit bureaus and used by each of them the same. When information is updated on a borrower's credit report, their credit score changes and can rise or fall based on new information. Here are some ways that you can improve your credit score. Pay your bills on time. 6 months of on-time payments are required to see a noticeable difference in your score. Increase your credit line. If you have credit card accounts, call and inquire about a credit increase. If your account is in good standing, you should be granted an increase in your credit limit. However, it is important not to spend this amount to maintain a lower credit utilization rate. Meanwhile, try to pay down your debt. Don't close a credit card account. If you are not using a certain credit card, it is best to stop using it instead of closing the account. Depending on the age and credit limit of a card, it can hurt your credit score if you close the account. Work with a credit repair company. If you don't have the time to improve your credit score, credit repair companies can negotiate with your creditors and the three credit agencies on your behalf, in exchange for a monthly fee. Correct any errors on your credit report. you are entitled to one free credit report per year from each of the main credit bureaus. You can get your report through annualcreditreport.com. You can also hire a monitoring service to help keep your information secure. Your credit score is a number that can significantly impact your financial life. If you have a good credit score, you are more likely to qualify for loans and to receive better terms that can save you money. Learning what your credit score is and what goes into calculating it can help you take steps to improve it.